All right, we'll talk about a few things here. We kind of got a quiet week. It's going to be a quiet week in the equity market, bond market. You got a holiday week, but you do have something pretty noteworthy at the end of the week in the job number. The jobs number comes out on Friday. There are a couple of other ADP number stuff like that that might give you sort of a few clues to what the job number looks like. And pretty simple, again, not to talk too much macro here, but what we're supposed to see is if there's a strong jobs number, the market should instantly interpret that as taper on. Okay, that's it. No more questions, taper on. Okay, if the job number is soft for whatever reason, knowing, according to Powell's track record, I don't see how he starts tapering into this. We continuously, today again, got more economic numbers, consumer confidence, stuff like that. Some of these numbers aren't even close. So what we've been seeing in yields, right? We've been talking about this for a while. Everybody expecting, because of the reopening of the economy, and obviously we've hit some hurdles there, but everybody expecting an up cycle in rates. You hear it from everywhere and everyone, okay? And it's been quite the opposite, okay, for whatever reason. But in all likelihood, we're starting to see some of those reasons because a lot of these economic numbers are coming in soft, not just here, across the globe, right? China, they had a PMI, I think it was yesterday, excuse my French, shit the bed, So it's not just here. China's officially slowing down. They could be leading the way. They let us out, right? And what's that mean? Okay. Like I hear from a lot of people, who cares? Buy the dip, the stocks go up, which they're not wrong. Okay. The market's rigged. If Powell is going to be reluctant to take off any of this medication we're on, QE, and taper it all, chances are the market will continue to go higher and dips will be bought. But, there's a lot more going on there, right? We talk about underneath the hood, what types of stocks are going higher, all right? And you may still have more of the same where the S&P 500 holds its own and refuses to correct, okay? But if rates head lower, it's going to be really difficult for any of the cyclical part of this market to catch a bid, okay? And we already know what that means, right? That's a lot of names. And you look now, right? Because I wouldn't say long in the tooth, especially in positioning wise, but as far as time, this rotation out of cyclical into defensive growth, okay? The software names, the big tech names, the FANG names, it's not new. It's been going on a while now. And you have stocks that look like this on that side, right? So the interesting thing becomes, if the cyclicals are going to remain out of favor because rates are heading lower against what everybody is thinking, okay, what does the other side look like? Do they keep shoveling money into these things? All right? Because if they do start to take profit, right? If these things just have come too far too quick, then we're going to get a pullback. May not be a crash or a vicious correction, but we're going to go into a period of time where there's some volatility. They take profits on names like that look like this. They refuse to rotate money into the cyclical parts of the market. And when you have that, that's where you get these pullbacks, right? We've seen that from time to time. They've only lasted a couple days, if that. All right. But that's generally what I'm looking at here as, we polish off the summer here. We head into September. that's the biggest thing on my mind. I just, where will the money go from here? Okay, this can go on, right? Who knows how much more it can go on for? But there's going to be a period of time where there's going to be profit taking in these things because they've come a long way. And it's the question whether money rotates into something else or they just get into a cash position, and that's going to translate into some fear in the market. We're going to see it in sentiment, and then ultimately, probably set up a real nice entry for us. So what do you mean profit taking by who? Profit taking whoever bought Google at $2,000 and it's at $3,000. I don't know what that means. I don't know what that means. They are lifetime position stocks. So who buys them if they're lifetime position stocks? They just buy and nobody ever sells? So these stocks never go down? I don't know what that means. What Dan, what's this? What's this right here? Okay, what's this? What's this? You see how stocks go down sometimes? What's that? That's from buying? I don't understand. Yeah. So what do you think I'm talking about? Google going to zero? I don't know what you're talking about. I don't understand. Maybe I don't understand the question. That's what I'm talking about. That these things have rallied too much, and eventually there's going to be profit taking. Otherwise, Google's going to be at 10,000 in 2 weeks. Selling property. You lost me there. I don't know what you're saying. But anyway, maybe somebody else understands them and can help them out because we'll be here the next week. I don't know what he's saying. All right, so that's what I'm looking for here is when these things reach a point where there's some profit taking, they come out, they go somewhere else. Where do they go if they go anywhere, right? And I think based on rates and, we're going to get some clues off the job number Friday, we'll probably have an idea. Because if there is a strong number Friday, there is a good possibility that we see some of these reopening themes catch a bid. You see rates even just bottom and grind higher, and then you could see a really nice move start out of an IWM, which we've been talking about. Okay, but it really looks difficult, right? Yesterday, you could sense the frustration whoever was in the steam room with me yesterday. IWM was down, and I just couldn't figure out why. You know what I mean? I just couldn't figure out why. And you could see that rates yields can create a real problem for IWM. If yields start to head lower from here, okay, and that translates into selling into IWM, it doesn't matter, it doesn't matter what we think, right? So that's my worry. Like IWM is basically right now, that correlation could break, but your prototypical reopening play. Like if you want to make a bet on reopening, IWM is probably a great candidate for that. To be honest, I don't want it to be that. I don't want it to be that. Because again, not that I can't see a rally from this over the short to intermediate term, but there are a lot of people, there's still, stubborn bulls on that side of the fence where, I can see neglecting cyclicals go on for longer than people think. Okay. I can also see the other side to that. But it's just, I'd rather it not be. Would I rather it be, if that's your question, and what I thought it would be? You see what we're seeing right now the last couple of days, for those of you who are members, you see the focus on a lot of underbelly names, a lot of small cap names, a lot of speculative sweeper activity, okay, in the past, we've seen IWM fare really well when we see that type of action and outperformance. This go around, not that it's gone lower, but, yesterday IWM was down a lot more than the rest of the indices, and they were small caps up across the board, So that's what I mean by that. Okay, that's what I would rather it be, because what I can easily see happen where we are right now, and with a lot of these big tech names just really extended, is possibly like the overall market, the NASDAQ, run out of gas a bit, right? The indices sputter along, right? Maybe you get a little digestion, a pullback out of it, but under the hood, there's some stock picking again. And that's where you can find alpha, And on top of that, it would be nice that you could also be involved in an IWM. We can play a TNA in addition to that, right? Like that's where a lot of us were thinking, going into this, possibly this new cycle here. But I'm not 100% convinced that IWM is going to be a part of that, even if we see it because of rates. I mean, do you guys think differently, or, we've had this discussion, how many webinars now, right? About this IWM and what do you need to move higher for this IWM to rally? Has anybody figured it out? Yeah, but a short squeeze, in other words, I understand that. Without a doubt, that's the allure. It's the short squeeze. But what squeezes IWM? What the hell would squeeze for IWM to push higher? You know what I mean? I don't know. Like, what is it? The AMC GMEs, which a lot of you were pushing on me. Well, yeah, but that's what. Okay, AMC GME, right? They both were higher yesterday, the last couple of days, and IWM was down. You know what I mean? So the makeup of IWM, there's got to be, okay, energy names, right? That's another thing we were thinking a couple months ago. And energy had the nice rally. IWM did nothing. Banks, right? Banks, guys, we went through all this. We're thinking the same thing you guys are thinking. Banks are at new highs. Now, others say regional banks, right? So is it just a regional bank play? That's what IWM is? Is that where in other words, you're going to make a bet on regional banks if you're buying IWM? I don't get it. I really don't. For me, when, again, just from my eyeballs, forget the makeup of the ETF. When there was aggressive sweeper activity in the little stocks, okay, the underbelly names, not just $2, $3 names, okay, but 30, 25, 20, just under the radar names, not Google, Facebook, Tesla, okay? When the sweeper activity was aggressive and the price action was constructive, that's where IWM has done well. Okay? That's from my experience. Now that correlation's been off recently, maybe it's not completely off. Maybe we see it line up again like that. I'm hoping it's lined up that way. I really am. Because you see the action we're seeing now? We could see that. And, you got a liquid ETF with a nice leverage play in TNA, which we can take advantage of. But we've already seen some really nice move in a lot of these small caps of recently here. And IWM, it's only a couple of days, but kind of got caught up here. So anyway, that's what I'm looking for, right? That's what I'm looking for. I'm looking to see what we have right now, what we're seeing right now, continue. And for us, like we've been singing a different tune for a while, right? Focus on the S&P 500 off a dip, right? If you want to be safe, rather than bet on names, play the S&P 500 or the NASDAQ. Don't try to get cute because the market can bounce and whatever your stock you bought might go down, okay? What I'm looking for now is a change in that, where alpha is in individual names and the overall markets get a little slushy. That's what I'm looking for. Doesn't, we could be the opposite and we melt up and it's game over. Okay. But that's what I'm kind of looking for. More of the same of what we've been seeing the last few days here. What changes what as far as larger wash is going to be really difficult to get. It's certainly possible, but you're going to really need a catalyst because of positioning. It's just really not there right now. You know what I mean? There's nothing based on positioning that really will assist the move to turn into an outright, violent correction or reset. You need that exogenous event. It's possible, right? You never know. We can't predict the future. But right now, with the evidence we have in front of us, guys, they just came out with an ETF. I was telling you guys in the room the other day to look at CNBC. They came out with a new round of ETFs where you're hedged. So you own individual names, right? You own the S&P 500, SPD. Thank you, John. Okay. There's almost a bubble in this. Okay. Everybody, I told you guys, this has been the pain trade. Everybody thinks we're in a bubble. We're not in a bubble. This move in the markets has been painful for most players. Most players have been long cyclicals and reopening plays and have been protecting those equity positions with SPX hedges. Okay. What has happened? The S&P 500 has roared higher and the individual names at best have done nothing. A lot have gone lower. So now you lose your money on your bet in the names and you lost your money on your hedge. Okay. That's the pain trade. That's painful. There's nothing more painful than that. It doesn't get any more painful than that. You talk about frustration, right? You guys know what I'm talking about. This has been the pain trade. This hasn't been euphoric, not even close to euphoric. People are pulling their hair out of their head. So, that's what makes a violent correction even possible. Like you got to catch a window where they're not hedged, and then they got to scramble to put on that protection, that hedging, right? By aggressively buying VIX and puts, and they get caught extremely long and they get margin calls, that sort of thing. We just don't have it now. We just don't, even on the positioning side, even on the positioning side, it's just not there. This has been the pain trade. So what pain trade is left, right? We were talking about that. The only real pain trade I see out there right now is IWM outperformance. However the hell it happens, okay? I don't even want to get into another conversation about that. But however the hell it happens, IWM outperforming the S&P 500 and the NASDAQ is the pain trade. Is that a line of his? I'm not a big Seinfeld guy, but I know it's a big thing. Yeah, you guys know what I mean? One, from the short position. Two, capitulation in the ETF positioning last week. Was it last week? Into the downturn, whenever it was. Okay. And you know, or look at the price action, right? When you have this, people just give up on it, right? People give up on it, especially when you have other things outperforming. You know, so anyway, that's the new pain trade. I got a couple of buddies of mine who say, listen, who cares? Don't, why you even got to try to figure it out? Place a bet with enough time and don't even try to figure out what's going to cause IWM to go higher. You know what I mean? You lose the money, you lose the money. It's a bet. But you catch a pain trade squeeze, the risk reward is worth it, right? And you know what the main thing is? You know what my answer to that is? Because they're 100% right. My rebuttal to that is that I don't want, it'd be foolish for me to be caught to lose money on a trade that relies on higher rates, while at the same time I'm making fun of everybody for calling for higher rates. You know what I mean? You guys know where I'm coming from? Like every webinar we come on here, you hear me trolling people who are calling for a higher rate cycle for the past 2 months. You know, like that's what's been holding me back. The God's honest truth. That's the only thing that's been holding me back. The only thing, you know, because until there's going to be a point in time where people finally say, you're going to hear the tune and the tone change. Okay. Instead of we're entering a higher rate cycle and inflation, you're going to hear the word deflation, lower rates, negative rates, right? Remember negative rates? You're going to hear that really start to manifest. And you're going to start hearing more and more people talk about that and change their tune. And I think that is the ultimate signal, right? The ultimate signal to get back into the cyclicals and the inflation trade. You know, but up until, you know, it's been less and less, but still up until this day, you hear people, like I heard somebody just before we came on, like, oh, you know, this is what you want to be for a higher rate cycle. Like, wait, you just, how do you know it's a higher rate cycle? You know what I mean? You're just assuming that rates are going up and you got to be in this. You know what I mean? You can't own these because we're entering a higher rate cycle. What about if we're not there yet? That's a really painful trade if we're not there yet. And guess what? They've been saying that for how long now, and it's been really painful. You know what I mean? Yeah, so that's when they start to change their tune, and not only will we be seeing it across the board on positioning, we're going to start to hear it by watching CNBC and Bloomberg. You know, you hear all these talking pieces, you can't miss it. That's when I think, whether it's at a higher level than where things are trading at now, or lower, or at the same, it's irrelevant. I think that's the ultimate kick in the ass for us to really start looking on that side. You know? So anyway, that's where we're at. Okay. Not much has changed as far as sentiment has improved. Okay. We had a little bit of a pullback over here. This little jammy jam, right? We've been talking about it. Did a lot of good for sentiment positioning. Hedge funds, remember? That was the main problem, right? We were concerned hedge funds were really starting to get a little too excited on the long side. They're gone. They puked up everything into this. All right. That was the big worry. They puked it all up here. Oh, there's our girl, Kathy. Here. Okay. Right. Here we are. This continues like this. We got issues. We get a little bit of a pullback for 2 days or whatever it was. Gone. Gone. Kaput. So, you know, that's another thing too, like for a downturn. Like hedge funds, they got guts and ghoul here. You know what I mean? Like hedge funds, you need them to unravel to really get some nice downside, right? That's what moves markets. They puked up all day long. If anything now, right? We talked about this. You got risk going this way now. Oh, if we get a little pullback, this thing goes here, we're salivating. You know, so this problem's gone too. There are no signs in VIX positioning of people getting too crazy, any offside positioning there. So, you know, it's real again. We were saying this Sunday, if the Taliban throws a nuclear missile over in this neck of the woods, yeah, you're gonna get some downside pressure, you know. But outside of a major catalyst that comes from out of nowhere, it's really hard to see. Here are sectors, okay, and because of this rolling bear market correction from sector to sector, basically, that's been going on throughout a big portion of this rally. A lot of times when markets really top, not even for good, but end up translating into a major correction, you see all these risk-on sectors, all of them flash heat, all of them. You know what I mean? All of them or close to it. There's nothing flashing heat now. Nothing. Financials flashed a little heat. They cooled. Tech overall flashed heat. That cooled. Semis flashed not even, but that cooled. Utilities, that's where all the money. And you see this rally, all right, Tree, we were talking about this on Twitter. The rally that we've been seeing for the most part, it hasn't been a bullish rally. It's been a defensive rally, kind of like the COVID lows when we bottomed off COVID. They weren't buying stocks because they were bullish on the economy. They were buying stocks because they thought COVID was going to turn us all into zombies and we couldn't leave the house ever again, right? And those stocks actually let us out. So what they're doing now is they're not buying risk on, they're buying mega cap tech that's been through the ringer, that just went through one of the worst crises we've ever had in COVID, right? Been through 2008, been through the worst of the worst and survived. That's what they're buying, right? They're buying utilities. They're buying big buyback names. That's been a huge outperformer. Or any stock that announced a nice size buyback, team. So this hasn't been a bullish rally. It's been a defensive rally. You know, so when things get, when it becomes bullish, you're going to see, you know, a lot different participation involved, right? Things that rely on the economy doing well haven't been participating in this up move. So it's kind of, we're in a correction. Can't look at it by we're looking at the indices, but we're in a correction. All right, so here, like I said, there's nothing going on here. You know, you like any of these groups, any of the main leaders, especially in these groups, you get a bullish signal. You know, that's, or close to it, that's where to fire. You know, that's where to fire for a trade. I wanted to look at with you guys. Where'd it go? Oh, shit. Where'd I post it to? Hold on. Oh, didn't go through. There we go. And then we'll talk about names quickly because, you know, even for tactical trades, the underbelly action now is not bad, guys. For those of you who like to be stock pickers, especially those of you who like to play equity rather than calls, you know, smaller names, it's not that bad out there right now. You know, it's not that bad out there. So here is the client flow. Okay. Financials, buybacks. That's why these financials, okay. Any other, I told you guys, I feel it's almost like rigged market number 2, but it's not breaking the rules. Okay. You have rates, yields, okay, interest rates at a low point here, right? So you got yields doing this, and you got these monster banks doing the opposite, right? They buy every dip. Why? Who's buying the dip, right? Themselves. They're buying the effing dip. How are they going down if every little dip, they're buying their own stock? Okay, this dip here, right? This is where we thought maybe the financials could really come in a bit. They bought the living daylights out of these things in buybacks. Right? Matter of fact, Boba said financials now, as far as buybacks are a whole, are bigger than tech dollar-wise. Okay? So you got another rigged market here where every little dip, the companies are flush with cash and they buy back their own stock. So lower rates, lower yields, bad for banks, throw it out the window. Where am I? All right, so you got here, financial buybacks continue to accelerate. Buybacks by corporate clients decelerated slightly overall, but financials accelerated, hit another record high. Boom, bottom chart. Okay, if I'm being honest with you guys, if this didn't exist, you'd probably have a nice correction in the fins right now. All kidding aside. All kidding aside, the financials probably would be in a nice correction. Okay. We noted last week the S&P 500 sector buying back the largest dollar amount in a given week has tended to outperform over the next several months, or greater than a 50% hit rate, for obvious reasons. Overall, single stocks, right? 10 out of 11 sectors, the financials the only one because they're buying back their own stock, they sold the shit out of into the pullback. Okay? 10 out of 11 sectors saw single stock outflows last week, with the largest outflows, we've been talking about this, consumer discretionary. So that's Amazon and Tesla, correct? If you want to make a play there. Yeah, Amazon's been great. Tesla's been great. Both of them. You know, a couple of you guys made some nice scores off of those two. Few of you guys. Financial was the only sector to see inflows driven by buybacks. Ex buybacks, there was no buying. Ex the buybacks in the fins, there was no buying. So complete shakeout. I didn't get a chance to read the rest of this. Let's see. Overall ETF flows were driven. Oh, this is ETF flows now. Small outflows, which posted the first week. Let's see. Both growth ETFs and value ETFs saw inflows. So both of them are even. You know, we've been talking about this, right? It's evened out now. There was huge offsides positioning, right? Value, everybody was in. Nobody wanted growth. Okay. And then what happened? Little by little, they started coming over to the growth side. Now it's about even. Later, Trey. Now it's about even. So for those who were asking, is it at an extreme yet? Right? For good reason. Because growth has outperformed value pretty notably. It's not at an extreme. You know, they're basically flat right now. They're basically flat right now. And that's it. Net, there was buying in ETFs overall. Outflows, financials, materials, utilities saw outflows. Now, if you're asking how did financials see outflows? They didn't have buybacks. This is ETFs. So financials, materials, who were, if you remember how ridiculously long those two groups were, remember we were talking about how crowded they were? They're not that crowded anymore. Financials and materials. And energy. Not crowded at all. As a matter of fact, energy has been really washed out. All right. But financial materials too, they've washed out nicely. Okay. Again, financials, they're buying, their own banks are buying their stock. That's where the buying has come from. God bless you, Jules. What do we got here? So here's financials. We're the only sector to see inflows. So here's how it looks. Okay, you had the buybacks here in the fins. Everything else sold. Here's buybacks. They're the only ones buying. Retail selling. The dark blue is the 4-week average. And hedge funds last week, like we mentioned, sold. Right? So what I'm getting at, guys, it's constructive positioning. You know, it's constructive. There's no long in the tooth. Look at the ETF positioning here. I found this interesting too. Down here, I'm looking. Healthcare, which is safety. Tech, we spoke about that, right? They're buying those mega cap tech names. And staples. Financials, materials on the bottom here. Okay, the dark blue is the 4-week average. Light blue last week. And see here, this is what we were talking about, value growth. See how even it is now? You know, real even. All right, and that's that. That's that as far as client positioning is concerned. But definitely interesting on the financial side. You know? So what's that? Do you literally, you buy every dip in the fins now? Is that basically what it's come down to? Right? You buy every, unless credit spreads blow out, you buy every dip on the fins. Unless buybacks dry up, I don't know. But fundamentals go out the window. All right, and let's look at some names, because I think that's where the action is right now. How do I go to my, oh, here. Let's look at some names. All right, so Mara, not a new name, but caught some a couple nice sweeps in on this October line. I think it's a Bitcoin play, right? I like the sweeps. What I don't like, I don't know if it matters to this stock. You're going to run into a niner here off a nice move already. And that may not mean much, even if it does work. You may get just a little breather, you know. Worst case, even you might get something like this. Maybe you want to wait for that, being October. Depends, how you're looking to trade it. But caught a couple, like 3 of them. Nice sweeps. This GSM, I think, is a commodities play. I remember playing this thing when commodities got hot. Later, Parv. Thank you. This GSM, anybody know this name? Anybody follow GSM? Materials, right? So for whatever reason, materials kind of been chopping around lately. This thing has been getting hot here. Yeah, look at this. And, we've seen flow in this. I played this. I remember playing this and literally got out the next day for a nice hit. Where the hell? That was exactly. AMRS was the other one. Those are the 2 I played. It's funny you mentioned that. See, this is what a lot of the materials look like. More choppy. But this GSM is doing something right. Anyway, caught that one sweep I just showed you guys and a couple little ones behind it with a lot of time, March 10s. PUBM. This is a name I played today. I actually played it last week. I think it was last week or some action. Didn't really do much. Today I caught a nice move out of it. A lot of names I've been playing multiple times. Initially they don't do anything, and then, off the second, third time I get lucky. Because I'm trying to catch them a lot of these things intraday for the most part, the equity. But this caught a nice squeeze today. Caught a nice squeeze. And I like this setup because it's dead down here, And there's been a lot of action in this name. A lot of action. I never heard of the name before this round of action. And then all of a sudden, squeeze sweepers have been coming in, This is the Jan bet. This was the best looking order that it caught. But what made me play it today, more so than this, was multiple September sweeps. Cheaper, a lot cheaper, but it kind of gave us a heads up that it could move today. All right, US Steel, I didn't play it. I think when I last looked at it, was moving. Caught a couple of sweeps. These were 2 of them. Into weakness too. Let's see. I didn't check it in the afternoon. Yeah, it looked like it bounced. Yeah, kind of a grind. But a little buying into weakness today. Nothing extravagant, short-term Septembers. ICPT, I remember when this thing was a beast. How about that? I don't know how long ago that is. I think this is it. ICPT, I'll tell you right now. Hold on. Yeah, this is it. Wow, look. This is what I'm talking about. Look. See this move? I remember this. This is a weekly. Look at that. Is that nuts? And this thing's been dead ever since. Honestly, I can't remember the last time I've seen flow in the name. It looks like a weekly niner. All right. So anyway, on the daily, you could see a disgusting downtrend. little bottom here, and there have been today and I think either Thursday, Friday, sweeps. Again, I haven't seen sweeps in this name in ages. But they're buying with time. Today was Jan, Friday or Thursday was December's. And this is, decent size for that name. Again, doesn't catch any action. DLTR, I don't even, honestly, I was iffy even putting it on the list. DLTR could catch a lot better size than this, but the stock got killed off inflationary concerns, and it's a dollar store. That's not good. So my opinion, you probably want to see more unless you think it's completely washed out here. But not really anything special. Keep an eye on it. What else we got here? W, that's a name you guys trade, right? This is a beast. I like to see, it almost forces me in the action. So it's either got to be one really nice sweep that catches my eye, and I think the stock is completely washed out, or like the PUBM, where you just see, you don't even pay attention, but by default, so, multiple sweeps, it gets your attention. So that's basically how I approach a lot of these bleeders. So W had a down day today. This thing's been stuck in kind of whatever you want to call it for a long time now, right? It was a stay-at-home play, I guess. September 285s. So playing a bounce. Here's a new name that's been catching some action. Ping. Any of you guys know this guy? I think we spoke about this guy. Caught some action about a week ago. Oh, it was before earnings? Before earnings? I don't remember. But anyway, caught some action a little before this move started, and then some more action with time here. But this thing hasn't done much yet. So keep an eye on it, especially more comes in, right? Might be one of these hidden gems. I like the new names. That's what I'm interested in. CCJ, this is another name I know you guys like to play. Uranium's been hot. Oh, security name, correct. That ping is a security name. So you kind of see, this is the stuff I like. Like you kind of have here a security name, right? That nobody knows about. And, starting to catch some sweeper activity. You look at the security names, like, look, right? This was one of the recent ones, S, right? Same thing, just came public. Look at that rip. Look at this. And again, there's another one I know quite a few you caught. I think still holding on to, you bastards. Damn, this is a move, man. This S. And a decent spot too, right? Ping, they've been buying with time. I don't remember exactly the initial bet, but it looks something like this. December in the money. April? Oh, wow. Okay. So, and you see, that's kind of what's catching my eye. It's not spec action, right? There's somebody who likes the name and likely taking an equity position, you know what I mean? And is sprinkling in using the option market for a little bit of leverage. So maybe we see some shorter term stuff come in, and that'll signal this thing may be ready to hatch completely. Oop. Where am I? All right, so we'll keep an eye on it. PSA, this was an unusual sweep, a lot of time, but look at this stock. Look at this move. Good God. So forget this. March 350s. Oh, CCJ we were talking about. Yeah, CCJ. Looks good, CCJ. What's the uranium ETF? URA. Oh, well, look at that. Looks identical. So this is basically just a straight up uranium play, huh? CCJ? Is this, do you guys like this name or you like, is it CLF? I get these two confused all the time. Maybe you guys like CLF. I can't remember. Anyway, CLF is metals. I know that. I don't know if it's steel exactly, but I know it's metals. CCJ is uranium. Here, someone, yeah. Camco produces, sells uranium. There you go. Yeah, wait, how many U's is it? I remember that. 4 U's, I think, right? No. Another one, UEC. This is kind of, you getting a little more speculative here. Say $2. But if you want to make a play on uranium, this is a good one to do with CCJ. And been hot. Oh, 4 U's. U. This is uranium? Yeah, maybe. I think it is. This is the ETF, and DNN's a real cheap one, yeah. URG. Yeah, these are all cheap. This is the best one to do with, and that's why we see the most flow here. All right, and that's it, right? I went through them all. That's basically, that was the top action today in anything even remotely close to new. You had spec action all over the place. You had repeat buying in names like this Beast, Bill, right? Like, yeah, I don't know what you do with it. Skills, that's another spec name, caught action today. I mean, I didn't play it, but it's not the worst spot. See, like for me, the reason why I like these names when they get, like if I'm going to catch skills while it's catching action down here, right? I know my risk. Like this thing's got to move now. You know what I mean? If I'm not day trading it, I'm holding it a couple of days. And, otherwise I'm peeling out of it. I'm not making love to this thing down here, unless you really like the name. But I'm saying that the spec action in these things should get them going now. The sweeper activity should get this going now. Right? It was mostly short dated action. That's what they're doing. They're trying to squeeze them. And like I said, sometimes, especially if you're playing the equity, it's a lot easier. When they come in multiple days, sometimes you're going to play it, it doesn't move, you get out of it, they hit it again, you play it, maybe you made a little bit of money, you get out of it. But then, the third or fourth time, if they keep coming back, might lead to a nice size move. So that's kind of like what I got lucky today with the PUBM. Didn't do much, and up 20 cents, down 20 cents. Today it ran $2. So like that's how you got to play them. And the reason why I like them, your risk reward is peanuts. I mean, your risk is peanuts. You don't want to marry these things, get caught in a downtrend. Right. On the calls, the problem with the calls, the spreads in these things, especially when they're hot, because they're sweeping offers, they're playing the squeeze, you're paying up, and then 2 seconds later you sell at the bid, you lost money, right? So that's the problem with options in these things. But the beauty of it, if you can, you're not talking like I understand not playing the equity in Tesla, right? I understand not playing the equity in Amazon at a gazillion dollars. But when you're playing 30, 20, 10, $5 numbers, for day trades, I don't see why you wouldn't play the equity. You're looking to get a little lucky, you're rolling the dice like a sport or a BBIG, and you want to hold overnight, you're risking some premium, maybe you catch a lotto ticket, that's a different story. You're going to play the calls. But if you're looking for that like high risk reward, even intraday trade, the equity, they're cheap on these things, man. Some of these stocks are, the premium is more expensive than the equity price. ALIT, let's see. Oh, yeah. That's an IPO, right? Information technology. See, these are the type of names I'm looking at right now. Because you have either right now, a lot of the names that we know, the good names catching these that caught aggressive activity, they're cooked on the tech side for the most part. You had earnings getting away of a lot of them. And, on the cyclical side, which is a lot more appealing setup-wise, they may not be ready yet. We're certainly not seeing much of any flow forcing us into the cyclical side. So I'm kind of, that's what I like to do anyhow. That's my bread and butter for the most part. I like to trade, newer names. A lot of times they're growth names. I like the newer stuff. This is the allure, this. This is the allure. God knows what this becomes. Like this was ZS. This was ZS when I played it off unbelievable missile action the first time it caught action. Nobody knew. Nobody had a clue who this thing was. Look at this thing. You know what I mean? Now, and we're not going to catch this move, but you're getting, you're finding an entry that, God forbid, even if you want to hold it for a little bit, you talk about sweet spot. Like trying to find a sweet spot on Google up here now doesn't even exist. LSPD, yeah. I mean, that thing got hot though, right? I mean, look at this thing. But yeah, definitely. Lightspeed Commerce. What a bullet this thing is. There was some put action, right? I mean, look at this thing. Oh my God. Listen, get the hell out of here with this shit. Come on, man. Like these things are crowded now, man, Now, that's a beast. These things are machines. But you know what I'm saying? Like, you're approaching the end in these things. There's going to be a pause in these things. You're not early anymore, right? Early was when we were seeing now sweeps, right? One after the other, where it didn't even move yet. And, that even wasn't off a major pullback, right? It was a little consolidation off a huge run. But you want to make an argument here, you're a bit early, beating the crowd, fine. Here now, you're anything but early now. Right? So that's kind of like what my brain is trained to look at, where almost to a fault, almost to a fault, almost too much. Like if I see a chart like this already, like I feel like, the easy money is over. Exactly. That's what I feel like. The easy money is over. And you know what the other thing is too? I think somebody was mentioning, I lost the comments here, but when you see flow in names that look like this, right? Or this, right? There are two risks to that sweeper activity. One, it's already owned, it's already bought. So the likelihood is it's probably rolling, you know. Smart money, they're not starting to build a position after a move like this, right? And being prudent about it. The other thing is the hedge funds, when they come in, they have to chase for performance. So it's forced buying, right? You don't want to get caught up in forced buying. That's not what you, especially, you know, swing trades and stuff like that. You know, you want to get in the middle of it. You want to trade in between it. Yeah, fine. But that's when we see sweeper activity in these names that look like this, that's what it is. It's either rolling or forced buying. That's what it is. You know, when like you got hedge funds, they spit up into the pullback last week. When they have to come back on and take hedges off and buy back what they spit up, they can't do it via equities. It's too slow. So they come in sweeping calls in all these big names. And don't get me wrong, it creates an unbelievable momentum. But, you know, after that, you got to be careful. You know, you got to be careful. There's enough pullbacks out there. Like, you know, you never thought you were going to see Amazon. This was the first, we were saying, right? The first super Scion blue in Amazon in like 10 years. You know, you like Amazon that much, right? Wait for some flow, find a spot, take a little time just in case you're early. And then with a little luck, maybe you cash a nice ticket. But, you know, up here, the breather's going to come. It's only a matter of when. You know, it's only a matter of when. So, you know, like I said, to a fault, my brain, a lot of times, you know, even early in the rally cycle, I'll shy away from a lot of stuff. Even trading tactically, I'll shy away from stuff that's rally. You know, I practice not chasing. You got to understand, for 20 plus years, I've been drilling it into my brain, you know? So I'm the worst when it comes to chasing, the worst, chasing green. Like I like death, dead heartbeat, not even downtrends, because, you know, you could be early. I like death. And then sweeper activity comes in, right? That's my edge. Uh-oh. This thing may be getting mouth to mouth here, coming back to life. Like that's what I like. That's where the, you know, the risk reward is appealing to me. You know, when the stocks have already moved, like, okay, where's the pause coming? You know, is it maybe this thing continues up for a little bit more? Am I going to be out of it by the time that pull comes? You know, it's almost like too much luck I'm relying on. Some keep going and going and going, right? Like A, and then some correct sooner. It's just very erratic. What other names? UPST, that's a good stock, right? Oh, wow, new highs. And this one too, you had ample opportunity, right? Big move. You don't chase this, right? You wait. Find a spot here if you like it that much. Okay? Rip, niner here. You don't chase this. Find a spot after that pull here somewhere. Okay? Doesn't mean you're going to cash your ticket here, but you weren't going to cash your ticket here either. You just, this got out of the way. Okay, so if you like the name, you should still like it here. You just got a better entry. You know, but that's what's great. Look at this. This stock has done it 1, 2, 3 times, offered it up. Somebody mentioned Snap has been catching really nice action. Yeah, I mean, it looks good, you know? Maybe you get a bust out to new highs from here. I mean, this thing is a beast now. November's. Yes, MTTR. That's the name I got my eyes on right now. MTTR. The flow's been okay. It's been active. Don't get me wrong. Just I would like to see one of those bets, Jay, that gets me really interested, you know? But there's definitely action there. You know, if you like the name already, I probably wouldn't wait around for a good looking bet. What is it? Good question. I have no idea. Anybody know what it is? Somebody was explaining to me what it was. I remember oohing and ahhing about it, but I forgot what it was. That's it. Virtual real estate shit, right? Yep. Supposedly like changing the game, right? Huge market. So there you go. I'm like you. I had no idea what they do. No idea. I'm like, oh yeah, I really like this name. I had no clue what they do. Oh, what a character. Oh no, it wasn't a SPAC name, was it? Damn, don't tell me that. Oh, it's GHVI. I remember GHVI. Shit. Well, that's the one negative about it. Yeah, I mean, eventually these SPACs are going to be playable again. I don't know if now is the time, you know? XELA, that's a nice little lotto ticket. Is that a biotech? XELA. Oh no, tech. Look at this. It's tech. Tech fish. So this name, they came in a couple days now, late last week and today again. Later, Robert, buying cheap lottos. All right. Again, this is, you know, I mean, you're looking for lottos. This is perfect. This is perfect. You know, I don't know what the hell they do, but, you know, you can see this thing catches any sort of interest, you might get lucky. I mean, this is $6, $7 number up here. Baby stock. Yeah, I'm sure it is. It's $2. But yeah, definitely worth a lotto off the action. Snow, I like snow. I like snow. That offered up a nice gift over here, snow. I just would try to buy pullbacks in this thing. You know, this is a little better, a lot better. This one moves. PLTR2, you know, a lot of action, but you just got to try to buy down days here and have patience. But this thing did rally a couple bucks now off the action. Let me see. I was looking at it today. Yeah, this is a nice move. This is a nice move. You know, if you're looking for more, just be patient because there's a lot of fits and starts. SDC, that squeezed. I missed that one. What did it do today? Nothing. Could probably squeeze further. I mean, this is the pigs of the pigs out there. You know that, right? Like even with everything else squeezing, this thing couldn't squeeze decently. But I mean, if it's ever going to catch a squeeze, down here is probably a good spot to take a shot at it. You know, it looks like nothing on the chart, but the other day, I think it was yesterday, right? Yeah. It was like $1.50, $2 move. But yeah, maybe there's more here. You know, there's been some flow in SDC recently. ATVI, did I get involved? No, I didn't play ATVI. There's been some Feb action and another month they're playing. I forgot what other month. But Feb's probably the best looking action. But you had supposedly it's not going to have an impact at all. But you have that China headline weighing on it now. Right? Kids are not allowed to play games. That's what's been weighing on these things the last couple of days. Yeah. Yep. 3 hours a week. So, you know what else got hit? Oh, I thought this got hit. This thing didn't get hit. I thought Billy got hit off that. Anyway, that was the headline. You had overhang this. And then you got the sexual harassment suit. That's why this thing got hit, ATVI. So you got a Fed buyer who's buying blood here. So worth a shot if you're interested. But I didn't play it, no. Yeah, you're probably right. I mean, would it shock you come the end of the year, this thing's back over 100? It wouldn't shock me, you know? It's a nice spot. It's just you're probably going to have some agita over the short term, some anxiety, stress. So you got to be willing to deal with that. I guess that's why he's going out to Fed. You know what I mean? He's got more than enough time. But see if it starts to act constructive here. You know what I mean? Because you don't want to see this start to go that way. And be early. So keep an eye on it. Let's take a couple more names. PayPal, PayPal's a stud. You can buy dips on PayPal, and it gives you entries. All right, this recent one here, nice pull. Now you got to chase a little bit of a run if you're not in it. I don't know if you're in it already, but you try to buy pullbacks on these. They're better entries. Another one is Square. The choppier. They're both choppy. But these things are, they're monsters. They're monsters. These aren't new names. They're monsters. The thing, see, what a lot of us have, we get reeled in. We see this, right? And then finally, the price action looks different here, and we think that this is coming. But that's very rarely the case. You know what I mean? Like for this to come again, a lot of times you need a lot, like lengthy consolidation or corrections. So it just becomes a tougher trade. You got to look to buy pullbacks for trades. Easier said than done because they start to look like crap, right? But that's what you got to look for. Even minor pullbacks for trades, quick trades. But, they're nothing new. Yeah, these things have been caught a lot of people on MasterCard and Visa. These things have been tough too, no? Even off the initial activity, these things are tough. A few months back. They're just tough. Look at this mess. Net, I mean, it's heading higher, but what a pain in the rear end. Yeah, they're tough. They're really tough. That's why, guys, I like the newer names. You know what I mean? That's why I like the newer names. You got a better shot at smoother rides. UA. Retail, I haven't really played much of retail at all, and they've been hot. This looks okay. UA looks okay. I really don't have a feeling on retail. The only problem with it is the reopening, isn't it? Yeah, exactly. They kind of like that cyclical trade. That's the problem. Yeah, they're tough. I don't know. They're tough. Mastercard's been tough. Okay, it's been tough. You know, got a lot of tough stocks out there. A lot. You know, now you look at all the big tech names, and we were looking at. Yeah, can you remember this? Remember the put selling? One of you guys mentioned it to me in the room today. Look at this move. But it was earnings, right? See, I can't even get mad. This thing's catching a little action again. TTD had a cute little move off the action initially, stalled out. You know, see this here you got a little more of a base. You guys know I love you. Yeah, the thing with you, okay. I think there's two things. One, I think you could buy dips and trade it like snow. I own a very, very small position equity that I'm tucking away, but I never bought the calls like an idiot. I never bought the calls. I'm almost embarrassed to say I never bought them. You know, I really like this name. So what I was saying is you can trade this thing like snow, right? Stock pulls back, catches some action. You got to trade there. But, the allure is tucking it away. That's why I did it. Like, I think this could be, whenever it may happen, it may take a while, but a new leader potentially. You know what I mean? You bought the Jags and sold. Well, that's the thing, right? You make money and you get a little nervous to market or whatever. And you had Jans with some time. Oh, shit. That's the problem. Yeah. Do you know the company, Dan? You know them? They're for real, right? Wow. Yeah, it reminds me of future leader. Like I said, reminds me of ZS, reminds me of SE, that type of shit. But you got to be patient. It's easier said than done. We talk about it all the time. You kind of want to look to invest in these things, if you know what I mean. But for trades, more of what we do, kind of like we said with the snow, you get something like this, and their sweepers have been alive in this thing. You see some sweeper activity, you buy it for a trade. That sort of thing. Another name, we talk about it every week. It hasn't gone nuts yet. That looks good, but they're going to hold this till earnings, MDB. This is not a new name per se. This thing had a big move. But I thought with a little luck, this thing would really take off. And it looks like they're holding till earnings here. Had a decent move. But you got earnings coming up, so we'll see. Which one, the MDB, Moshe? Yeah. Well, if none of us own it into earnings, it'll probably turn out like this, right? Right? If none of us own it into earnings, it'll turn out like this. This was another one, by the way. You know what I mean? Same mold. Even though it's a pricier stock, same mold. And then once you see, even the sweeper activity, like once you start to see the sweeper activity and they're real sweeps, like don't even get, if you're looking to do this type of trading or investing, don't get too wrapped up in what month they're playing, because they may play 3 months out, okay, but they're likely they roll that position. You understand? They keep rolling and rolling and rolling. So once you see real action and it's in one of these names, right, that you really like, and you're looking for sweepers to acknowledge it, kind of, then you come up with the plan. Don't get wrapped up into the month they're playing. Because what happens is you get all caught up, oh, they're playing September's, and, I want it further out. They likely roll that position when it starts moving. Yeah, it's impossible. You're 100% right, John. Impossible. What you look for in these names, right? These like potential leaders. Like, let's say you like a U. Like Dan is saying, he knows the company, he knows it's real. That's all fine and dandy. If the street doesn't recognize that, right? If there's no recognition of that, that thing could do nothing for a long, long time. What the sweepers do, it gets you to know that somebody else may see what you see. You know what I mean, Dan? Like the pros see what you see. And that's what you're looking for. And then that's it. You take it from there. What do you mean, in the options market? Like the sweeps we've been talking about, they look like this a lot of times. They look like this. You see big numbers, they pay big premium, They don't do this. This stuff, they're playing momentum, or maybe their algo sniffed out a rumor, you know what I mean? Or they're looking for that upgrade. When you see them come in multiple times and they dish out, the wood like this, sometimes we see $20 and stuff like that. They're building a position in the equity, and they're just that added cherry on top. You know what I mean? And the lot size is always tiny. Always tiny. They don't come in with 10K plus, you know what I mean? One shot. They 100, 200 lot it. Boom, boom. And they keep hitting it. Yep. If you guys remember the bill, that's the type of action it was catching for, I think it was August. They weren't these big, massive contract sweeps. They were just a bunch of 200, 300 lots, where they were paying nice premiums. So that's kind of, not even that they disguise it. You're right. They don't want the public to know, right? Like when you're a hedge fund and institution, you're building a position in the name and you're actively doing it, you're not going to come with some stupid, ridiculous size, get everybody in your way. That's foolish. Yeah, exactly. So they hit it with 100, 200, 300 lots, right? They know the retail trader gets excited about the way out of the money calls because they think, oh, way out of money calls, that means the stock is going there, They stay close to the money, if not in the money, because they want to get paid when that stock starts to move higher. That high delta trade, I honestly, I don't know. I don't know. Sometimes we see it in days. It depends on the market. See it in weeks, months. And a lot of times, Dan, where that's just where we're picking up on it. You know what I mean? Like their likelihood is they've been building equity position, and maybe this is like the final touches. So it's like we're picking up. So we don't know that answer. But that's why you guys know. That's why I like, that type of action, especially for swing trades. And when they come in lesser known names, you got a real edge there. You still have an edge in the big guys, but in a name like Bill, there's not a lot of hands in there. Not a lot of things in your way. Not a lot of sellers. So that's why it gets me excited. All right. Anyway, guys, I'm running out of saliva here. All right. Thanks for stopping by as always. We'll see how the rest of the week goes. It's going to be quiet in the equity market, bond market till Friday, but hopefully in these individual names, we get a little action. Keep us busy. All right. Enjoy the rest of the week, guys. I'll talk to most of you tomorrow.